Hey guys, Kevin Burgess back again with another video. I'm really excited to be with you today. I think we got a good agenda for the video today. I'm really excited about what we're going to talk about. We're going to talk about the dividend portfolio performance for the week ending of September 2nd. Then we're going to dive in for the month of August and look at the transactions that we did, whether there were purchases, sales, dividends, what the cash balances are, just so you can see the entire workings of the portfolio. Then we'll look at the portfolios themselves. We'll look at the annual income that's produced off of them, the yield on cost, the yield, what their 5-year CAGRs are, and things like that, so that you can see each portfolio. And then lastly, we're going to look at what it means to have a long-term perspective. We're going to look at an example of how we can kind of shape our minds around what a long-term perspective is. And you know as well as I do, we've got some tough times, not only at this point, but also moving forward, as the Fed came out this week and said, hey, we are really going to ratchet the interest rates up until we get inflation under control. So it looks like we may be in for some rough road ahead. And I want to share with you a bit from my perspective what a long-term perspective is. So if you're interested in that, stay tuned. Hey guys, if you're serious about building passive income so that you can be financially independent and even retire early, then dividend growth investing is a great way to begin. So in my videos, I have 3 different portfolios. One portfolio focuses on growth. And when I talk about growth, I'm talking about dividend growth. So it looks at companies who are growing their dividend at a reasonable pace. The second portfolio that I have, I call the dividend income portfolio. It basically looks for dividend yield from higher yielding dividend stocks. And that one is probably more applicable to old timers like me who are going to need to live off dividends at some point. So to have a dividend income portfolio is important as you get toward the point where you're actually going to retire. And then thirdly, there's a portfolio that I call the dividend snowball portfolio. And this dividend snowball portfolio is for people who are just starting out. If you're asking yourself, man, how do I get started in building a dividend growth portfolio? The dividend snowball portfolio is built just for you. I share both the good, and the ugly about my portfolio. I don't ask you to sign up for a Patreon account or anything like that. Everything that I have is going to be available to you in these videos free of charge. And it's really designed so that you can see what I do. And it doesn't mean that I want you to imitate what I do. It may just help you learn, or it may give you a different perspective. And it may be a perspective that says, yeah, I kind of want to build something like that into my portfolio. Or it may be, I am not going to do something like that. But either way, if it's valuable to you, I really would appreciate you smashing that like button. And if you're maybe a little more gentle and you're not as aggressive, you can gently press that like button. I would love that. It tells other people that the content in these videos is good. And if you want to see more videos like this, consider subscribing to the channel. I'd love to have you along for the journey. Don't forget to ring that bell so that you'll get notifications when my new videos come out. Now, it's important to recognize that I'm not an investing professional, so I am not here to give advice on what you should buy or what you shouldn't buy. What my goal is to share with you what I'm doing so that you can learn from that, either good or bad, and I'm okay either way. I just want to inspire you as a dividend growth investor to invest for the long term, building passive income so that you can retire early like I did. I retired at 55. So with that, let's get started. So let's look at the portfolio for the week ending September the 2nd. You can see that the portfolio actually went down $21,484. Of that, the market change was $29,551 down. That's about 3.4%. The S&P went down 3.3%, so pretty much in line with where the S&P was. Let's look at them individually, though. We've got a dividend income portfolio, and again, this portfolio is seeking current income from higher yielding dividend stocks. And you'll see that we got $340 in dividends this past week. I put an additional $7,000 into this account, and the market change was down by $9,644.57, with a market change down 3.1%. With the dividend growth portfolio, we'll see that we got dividends of $676.26. The market change was negative by 19,780.09, and the market change was down 3.5%. Now, the snowball account took a bit of a hit this week. We put our $50 in there, but the market change was down $126, or a 4.3% negative number. Year to date, we have dividends of $17,339.04. We got options income of $450. I've put about $131,850 into the portfolio. The market change is down year to date $51,117.67. Just to remind you, 2 weeks ago, the year to date was positive. So all of this 51,000 plus some has come in the last 2 weeks. Now, the market change is down 6.2%. You will see that the dividend income portfolio is only down 0.4%. The dividend growth account is down 8.5%, while the dividend snowball account is down 3.3%. However, compared to the S&P 500 on a year-to-date basis, the S&P 500 is now down 18.2%. So now let's look at the dividend snowball account. You can see the purchases that we made here. The 3 purchases that I do every week in this account are Alphabet, which is Google, and Microsoft and Starbucks. I put $20 in Alphabet, $20 in Microsoft, and $10 into Starbucks. So one of the things I want to point out here is the value of dollar cost averaging. So if you look at the first Google transaction here on 8/4, you'll see that we bought 0.17 shares, and that's based on whatever the price per share was at that particular time. And then the next week, we only bought 0.166 shares. We put the same amount of money in, but we bought fewer shares because the price was higher. Then we go to the third week, which is August the 16th, and you see that we only got 0.164 shares. Put the same amount of money in, but the price was higher, so we ended up buying fewer shares. However, when we get to the 22nd, the price was lower, and we were able to take our $50 and get more shares at that lower price. So dollar cost averaging is a great way to invest, especially in dividend growth investing. We did get a dividend, and I'm really excited about this dividend. 93 cents from Starbucks. That is the first dividend in the dividend snowball account. But anyway, we have $1.57 in cash sitting in this account. Moving on to the dividend income account, you'll see that I have cash in here of about $7,610. Oh, let's look at the annual income, $16,420. The goal for this account for me is $24,000. I'm looking to have $2,000 per month provided by this dividend income account. So that's why I'm continuing to put money into the account, and any dividends that I get are getting reinvested so that we can end up with a $24,000 annual income in this account. I'm going to share with you the purchases that I made. I'm not going to go into detail on the transactions that I made on August the 26th because I did a whole video on that last week. So at the end, I will give you the link to that video if you want to see more about what I did on the 26th of August, because there were some pretty significant moves there. On August the 2nd and 3rd, I bought Prudential. I bought 25 shares each day. Then on the 4th, I bought AT&T. So I'm going to move on to the dividends in this account. On August the 1st, I got $524.80 from Verizon. Yay, Verizon. I got $333.54 from Hess Midstream on the 12th. On the 15th, I got 3 different dividends. One was from AbbVie for $105.75, Kinder Morgan for $222, and Main Street Capital, my monthly dividend payer, of $193.50. So the total dividends for the month of August in the income account was $1,379.59. Moving on to the dividend growth account, you'll see I don't have much cash in here, $1,242. When I look at the purchases on 8/10, I bought Stanley Black & Decker 100 shares. You can see that on 8/26, I bought 50 more. I didn't sell anything in the month of August. And in August, in this account, I got a dividend from Lowe's on the 3rd for $63.68. A dividend from General Dynamics on the 5th, $127.75. Air Products came in on August the 8th, which is $162.88. And then Apple, it's a very small dividend, $3.46. So in total for this account for the month, there was $647.57. Now let's move on to what it means to have a long-term perspective. You know, most of the time when we are really trying to accomplish a task, we're looking at the things that are right here in front of us. We have our eyes down, focused on the things right in front of us. A long-term perspective, however, requires us to lift our eyes up and to look at the horizon. We want to look longer term when we're investing, not just what's in front of us, because as Warren Buffett said, we want to buy when others are fearful. And if we are looking at the items right in front of us, then we're going to miss the times when we can buy when others are fearful, because they are looking at the near term when we're looking at the long term. So let me give you an example of that, and I think it will be really interesting for you. So take a look at this. So this is Lockheed Martin. It is something that I do hold in my portfolio. However, this was back in 2018. And this is a hypothetical example. I did not hold Lockheed Martin at that time. On the 23rd of April in 2018, Lockheed Martin was at $358.60. You can see that price in this red circle. But by the end of the year of 2018, it had dropped by 31.6% to $245.22. So as an investor, if my eyes are looking down at just what's in front of me, I'm looking at this and I'm saying, wow, I need to get out of this stock. It is really killing me. I've lost 32%. However, let me show you where Lockheed Martin is today. The stock value now is at $418.57, an increase of 16%. Now, you know, I'll grant that it is over about a 4-year, a little over 4-year period. So you're talking maybe about 4% per year growth. But you can see since that time, it has gone down and it's gone back way up, and then it's gone way down and back up. There's just a lot of noise that's happening, but on a long-term perspective, this arrow is headed upward, and that's what we're investing in. Now, don't get me wrong, it does matter where the entry point is for your stock. So let's take a look at that. If we had invested in December of 2018 as opposed to April of 2018. So if we had bought Lockheed Martin in December of 2018 at $245.22 per share, it would have grown to $418.57, an increase of $173.35, or 70.7% growth. That, my friends, is a nice piece of growth. But there was a lot of fear back here. And so what we want to be doing is we want to be buying in this fear and recognize that it may not jump back up as quickly as it did at that point in Lockheed Martin, But we want to buy when there's fear, because it does matter where we buy this stock. One other point to this: what if you are dollar cost averaging all along the way here, and you're ending up then in the middle somewhere, or maybe even a little bit lower than that? You're still going to get a really nice return on your investment. So a long-term perspective is extremely important in markets like this. Stay the course, invest when others are fearful, and look to the long term, because it is the long term where we will be successful. So all of us from time to time get kind of enamored with our portfolio values. And you saw mine a little bit earlier, where on a year-to-date basis, I'm down 6.2%. But my perspective is not the near term. My perspective is the horizon. So I'm continuing to buy into this fear. And the point is that in the long term, it will pay off. Leave me a note in the comments below if you are storing up cash, waiting on the market to go down, or if you are fully invested and continuing to dollar cost average into the market. There's no right or wrong answer. So I can kind of get a perspective on where my listeners are on this particular subject. Looking forward to hearing from you. I really enjoy the comments, and I try to respond to everyone. And again, I'm going to scroll through my entire portfolio here at the end. Also at the end, I will have a link to the video that I did last week talking about these purchases and sales that I did on August the 26th. That was a pretty big restructure of my portfolio, so I wanted to share that in that video. And with that, I will see you on the next video.